All right. Thanks, folks, for joining our info session for Price Turning Points Indicator and sharing your Saturday afternoon with us. We'll be going over how to best use PTP Trend Trader on TradingView to help maximize your profits and minimize your risks. Before we get started, I want to go over the risk disclosure statement. By subscribing to our products and or services and viewing this website, you fully understand and agree that all futures, equities, commodities, options markets are subject to numerous implicit and explicit risks, none of which price turning points can control or influence. You therefore acknowledge and agree that all investment decisions you may make, including decisions that you take into account or rely on any information provided or made available by from products and services, are yours and yours alone and are made solely at your own risk. You should be aware that all risk associated with trading and investing, and you should also seek advice from an independent advisor before making any trading or investment decisions. So now that we have the lawyers happy, we can get right into the topics we're going to cover. We go over why Price Turning Points is offering this service and what our mission statement is. And we'll discuss 3 aspects of trading that need to be addressed in order to have a successful engagement. And then we'll discuss the tool itself, how to use it for day trading, swing trading, options trading of stocks, forex, crypto, and futures markets. And we'll go over the website to help you familiarize yourself with where things are. We're going to do a redesign, but it works for now. So we'll go through that together so you're familiar with it. And then we'll open it up to Q&A. So this session is going to be recorded and hosted online afterwards. So we'll provide a link to YouTube or any other place that we post it to everyone that's interested. And there are a few folks that signed up that I'm not able to join. So they'll be able to access it there. So while I'm going through, I would ask that you hold on to your questions if you have any, because we'll have Q&A at the end and some example trades to do. So why are we doing? Why are we starting a website or a service right now? So our mission is to help educate and elevate the earning potential of our members, and we do that by providing a framework to enter and exit trades where there is no framework to begin with. And what this does is it helps takes the guesswork out of your trading decision-making process. And eliminating guesswork will help you become more consistently profitable. And so that's our main mission statement, is to help you become more consistently profitable. Just before we go into the rest of the slides, I'd like to go over the reality of what retail traders face when they jump into the industry. So these statistics on the slide are pulled from over a decade's worth of data from different brokerage sites, brokerage services. So this is actual data of customer accounts that were analyzed. 80% of traders quit within 2 years of starting. And so they're no longer actively trading, or their accounts are completely closed after 2 years. And about 40% of them only last just about a month. And it's probably because they're taking on too many losses and understand it might not be for them, and they end up quitting after 1 month. And traders end up, what this statement here is saying is that traders sell their winners more than their losers. So what ends up happening is that when you analyze the different trades, 60% of trades that are executed are actually in winning positions. So traders are closing their winning positions, and 40% are losers, which means they're holding on to their losing trades. And this helps contribute to this factor here of 40% quitting within a month and then 80% quitting within 2 years. And we can help eliminate that by going about it in a systematic way. And then there's active traders, even the ones that are successful or considered to be successful, underperform the index, the general stock market, by 6%, 6.5% annually. So they'd be better off just buying the index and holding to the tune of 6.5%, instead of actively trading and making the kind of mistakes that they're making. And this is the kind of things we want to address with our service. So why are there such high failure rates, and what can we do to address them so that you're not part of those statistics? So there's three aspects to trading. First is the psychology portion, and the psychology portion is probably the first hurdle that most people would lead to a hurdle. It's a hurdle hard for them to get over. The problem is that we make bad decisions when we're emotional, and you're going to be emotional if there's money, hard-earned money that's in play, that you're putting into risk. So you being emotional almost completely eliminates all the knowledge base that you've accumulated over the span of whatever time you spent analyzing and trading or studying. So we want to eliminate that. And our solution is to make the decision-making process completely mechanical by using predefined rules to make our decisions. So regardless of the situation and regardless of how much money you're putting on the line, you use predefined rules, and that helps you eliminate the emotion. And it's pretty much like a checklist of what a pilot would do before taking off. And then comes money management. About 30% of trading aspect is money management related. The problem is when traders place their trades, they have no idea when they're going to cut their losses or when they'll get out of the position to begin with. So they have undefined risk capital. So when they get into their trade, and without having the predefined level to get out. Our solution to that is, again, using a mechanical way. Place it's called a stop loss if you're not familiar with trading, where you cut your losses very quickly if you're wrong, and close it out no matter what the situation is. So again, this helps you eliminate the psychology portion of it, because your ego is going to get involved and you're not going to want to take a loss. But if you're using a mechanical system, then the mechanical system will force you to get out if you obey your mechanical system. So that's the idea behind that. So we got 60% of your hurdles out of the way, but that's still 60% is failing, right? So we have to have a strategy in order to engage and stay in this industry for more than 2 years and now fall into those statistics we saw in the earlier slide. So the problem with strategy is most people don't have one. Almost everyone doesn't have one when they start, because this is not something you're taught in school, or there's a bunch of stuff online that's not very consistent and not very realistic when it comes to real world trading. And most of the time it's just buy and hope, right? People just buy because they hear other people are buying and they hope that it goes up. There's no, and they depend on the company's performance in order to gauge the performance of the stock or whatever other instrument that they're trading. So that's not a strategy. If you can't define it and write it down and explain it to somebody else, it's not a strategy. So our strategy, our solution is to give you PTP Trend Trader, which is a tool, and based around that tool, you can formulate a strategy. And we'll go over that in a later slide. And that strategy is very straightforward. It's only 2 rules. And the first one is almost by default a given. So you only have to pay attention to 2 rules when you trade. So if you follow these that are all outlined in the following slides, we think that you will have a very high chance of success within the industry and for yourself or in whatever business venture that you want to pursue. So what is PTP Trend Trader, right? That's the tool that we have on TradingView. Why do we need PTP Trend Trader? Well, we discussed earlier the high failure rate and the lack of simplicity in the industry. So that's why we need it. We need a simple, reliable tool to help us generate consistent profits. It's a proprietary tool developed by Price Turning Points, and it can be used on Price. It could be found on TradingView website under the Indicators tab. And I'll show an illustration of how to find it towards the end of this presentation. And who can use it? I think we made it so simple that if you can drive, then you can trade using the PTP Trend Trader tool, because we've essentially narrowed it down to the market action down into 3 different colors. Obviously, if you drive, you are familiar with these colors. And green in our indicator means that prices are moving higher, and yellow means that prices are moving sideways. So it's basically choppy action, and it's noise, and you should take no action during this time. Most of the road signs are yellow for caution, so you can associate that with that. And then red is prices are moving lower, so you should not own it. In fact, you should probably have a bet, towards the downside in a short position. So that's pretty much sums up what the PTP Trend Trader tool does and who can use it. And you can have access to it by signing up to a free membership to ptptrades.com. Okay, so now let's get into charts. I'm not going to delve too much into what charts are, how to develop them, or how to read them. There's plenty of material online for that, but I'll just spend 1 minute or so explaining what these bars are here, so we are talking the same language, and what this chart is. So what we do is called technical analysis, and what that entails is studying chart price movement to analyze securities and stocks, options, and wherever else can be charted. So instead of actually studying what the company does, we study what the stock price is doing and go from there. If you can mute yourself, please. Thank you. So this is a chart of the Australian dollar, and basically it's a forex chart, and how we can tell that it's each bar here represents 4 hours by looking here. So once you bring up a chart, you'll see different different designations here, like basically a table, and that 4H stands for 4-hour charts. So Australian dollar 4-hour chart, and FXCM is the data provider. So that's what that's telling you there. And each bar here, what I mean by bar is each one of these cones, you can call them, or a candle. This is called a candlestick chart. Each candlestick represents 4 hours worth of price data for the Australian dollar, the US dollar pair. So as we go along from the 24th of August into September, you see a bunch of 4 hours stacking up. So every 4 hours, a new bar will show up. And depending on what price did, will either move up or move down within that 4-hour period. And sometimes when you don't move much, you'll see a little wick like that, this little small bar here, this little small bar here, these kind of bars is when there's not much price movement. And so this is what a normal trader looks at when they decide that they want to use, it's called a naked chart, by the way. So there's nothing on it, no tool, just price data. That's industry term for what a price chart with nothing on it stands for. All right, so that's what an intro to a chart looks like. So now you're forced to make a decision on whether you want to buy the Australian dollar or sell the Australian dollar based on a naked chart. That's not too much information for you to go off of. So most people decide that they want to use some open source tools to help make decisions for their trading. So these are called indicators, what I put on. So this is the same as the previous chart. I just added indicators that a trader would add. These are all open source and free to use on any charting platform, really. And so the Australian dollar here added to a bunch of indicators on it. It's not much easier to read than this, right? Because here you have a simple chart, it's not telling you much. Here you have a complicated chart, it's telling you too much. And for your brain to analyze this real time and make a decision real time whether you want to buy or sell, you won't be able to do it, or at least there's not too many people that will be able to do it, because again, your emotions are involved, and you have time working against you, right? The price is moving constantly, and this is a still picture, but price is moving constantly while you're trying to make a decision. So it makes you forces you to hurry to make a decision, most likely the wrong one because you're hurrying to make that decision. Well, and so this is what a price chart looks like with price turning points indicator on it, with the PTP trend indicator on the chart. You'll get clear. First, I discussed earlier what the green and yellows and reds means. So greens here is that prices are going up, and you should continue to own it as long as prices are going up, are green, the bars are green. Yellow means this can be considered sideways action. You should take no action, or you can take your profits if you want, if it's going against you. But yellow means no action. When it turns red, that means you should either bet against it or put a short position on, or you should close your long position that you bought here. So if you bought here when it turned green, you should close your trade there. And vice versa here. If you shorted there, if you have a bet against the market there and you want it to go down and you're in profit, when it turns green, you should close your profits and then reverse the position, actually buy. Same thing here, sell. You sold here, you have yellow that goes sideways. That means, remember, no action. And it turns red again, continuing in the direction you originally expected it to go. So you're in profits again. And green again, you close your trades. Very simple and straightforward. So that, compared to that, I'll take this one every single time. And compared to this one where I have no data and I have to make up my mind, then I definitely don't want to use that either. So you should. Our idea is you should be able to make a decision on what you should do with any chart that you're looking at within 10 to 15 seconds of looking at it, right? Really 5 seconds once you've been doing it for a long time, because at this moment in time, you know what to do, right? Since the bar is yellow and is going sideways, your rules tell you don't do anything. So therefore, within 5 seconds of looking at this chart, you've already made up your mind on, you already know what to do following those rules. All right, so let me go and delve a little further into a breakdown what the charts look like. So this is the same chart. I just have these arrows here to help pinpoint out to you what, essentially defining what a signal bar is for you. A signal bar is where you see this buy signal coming, being triggered real time on the price turning points indicator. So instead of just having green and yellow bars, we want to tell you when you should buy in and when you should sell. So you don't have to wait for, actually look at the color of the bar. You can wait for the signal itself to actually place your trades. And so these are called signal bars, and they're all over the chart here. All right, and so I'm just going to add a little bit, one more definition to this, so we're speaking to the same language again. So you have the signal bar here, which I showed in the earlier slide, and this the bar that precedes the signal bar it's called the stop bar. And the reason it's called the stop bar is because this is where you're going to place your stop loss level, where you're going to cut your losses short. If once you buy here and it starts to go against you, you'll only be taking this amount of risk with your capital. So that's why we call it the stop bar. The low of that bar is where we're going to put our stop loss level at. And same thing for the downside. If we have a short position put on here, which means we're betting against the market and expecting it to go down, we're going to put our stop bar one bar behind the signal bar. So this makes this the signal bar right here. This yellow one, the top of it is our stop position. And same thing here and there. So you have a buy signal that comes in here. It's kind of a small bar, so it's hard to see, but you do see the buy signal show up underneath it. You put your stop loss right underneath, and when prices came against you, you got stopped out for a small loss. Same thing here. You have a sell signal. This is your stop bar. You put your stop bar where this blue box is. Prices continue in your favor. You're in profit, and you know your stop never gets hit in that situation. So that's what I mean by stop bar and signal bar when we speak. And that's how you determine the levels to which you put your stop loss levels at. Again, no thinking involved, right? Everything's predefined for you and everything becomes mechanical. So let's go over a real live example in a chart. So because here we're looking at historical charts. What you're actually seeing here is September 21st, real time at 12 o'clock. This is what you'll be seeing on a chart. And you have to make your decision based on that. So let me give you a real life example and see how we go about it. So here's a PTP trend chart. There's nothing else on the chart but that. It's green and it's yellow and it's red. And you're waiting for your signal to come up. You have your alert set up. And I'll show you how to do that later. You have an alert set up for a buy signal on a 15-minute chart for the S&P 500. So I'm looking up here. And so as soon as you have your buy signal come up, that becomes your signal bar, right? And once your signal bar is defined, your stop bar is defined because the stop bar is one bar behind it and it's the low. So you're going to set your stop loss level at 33.81 in the stop. And your entry, as soon as this bar closes, right, the PTP signal triggers and the bar closes. Once the bar closes, this is your entry bar. This is where you're going to enter the trade at 33.86. So you entered here, your stop loss is there. And this is all you'll see. So now you're just waiting to see what happens. If it's going to work out in your favor, it goes up or sideways then up. If it's going to go against you, you're going to come down here and you go and you lose 5 points essentially. 33.86 minus 33.81 is 5 points in the S&P. So this goes to predefining what your risk is before you enter a trade. So I know what the worst case scenario is before I enter because I already put my stop loss there. And so this is the same trade that we just placed here at 2,300 on the 14th of September. And oops, what did I do? Okay, sorry. So this is where we entered at 2,300 on the 14th of September. And just to point out to you, this is the same chart. This is 2,300 on the 14th of September. We entered at 33.86 and we put our stop loss at 33.81. And prices went sideways for a bit, but we're still green and turned up to go in our favor. Came back against you almost to where you entered, but we're still yellow and turned green again and continued higher. So you risked 5 points. And at the time the screenshot was taken, you were already at 3,408. So you made about 20 points in profit. So risking 5 to make 20 is a pretty good proposition. So that turned out to be a positive trade. Let me give you a short example. So this is an example on, again, this is S&P 500 on the 15-minute. We have a short signal triggered. So this becomes your short signal bar. This becomes your stop bar, one bar back. Your stop loss level is at 32.68. And you enter as soon as this bar closes, basically on this bar. So you enter at the open of this bar at 32.58. So you're risking about 10 points in the S&P. So again, same thing. This is all you'll get. The price is constantly moving real time, and you have no other information to work on. You're just waiting for sellers and buyers to take action to either take the price up and hit your stop loss level, or hopefully take the price down for you that since you bet against it and you're in profit. So again, this is on the 25th of September at around 2 o'clock, and this is to show you this is the same chart. 25 September 25th around 2 o'clock, and you shorted here. It went sideways, but was still red and continued to go down. So again, that was a 258 profit, and you ended up going here to come back up to 239 level. So at any point in time, you can take your profits off, or you can wait for a green bar or yellow bar to take your profit. And so that's an example of a short trade working out. So just to redefine the rules for you, I had these already picked out, the 15-minute bar, because that's where I trade the S&P 500. But you need to determine for yourself what time frame you want to trade, whatever you actually trade. What I mean by that is it depends on the lifestyle you're going to choose, right? If you can't be at your desk every day, all day, then you should probably not be trading on the 15-minute, because there are a lot of 15-minute bars during the day. So you have to choose that for yourself for whatever thing that you're trading. And you have to also consider what you're trading. Some things don't trade well on the 15-minute, so you shouldn't trade them on the 15-minute. But we can go into that in this more advanced topic, how to trade it. I mean, how to pick your time frame. But one of the rules is that you do have to pick a time frame, not to confuse yourself of going back and forth between two different time frames. And then the second rule is this actually goes to help with your efficiency. You'll become more efficient if you follow rule 2 instead of just taking every signal that you see. And I'll show you in upcoming slides what I mean by that. There's rule 2 says that the signal, the trend signal triggered by PTP Trend Trader must be confirmed by the previous PTP trend signal. So for buy signals, the current PTP buy signal needs to be higher than the previous PTP buy signal. I'll show you an example of that, like I just said. And then the sell signal needs to be lower than the previous PTP sell signal. And so if it's not, then you can ignore that sell signal if you want to be very efficient. And I would suggest for all of you who are just starting out with this tool to be efficient as possible so you can accumulate profits and not eat into your starting capital. So let me scroll down one time. Okay, so here's an example of long signals where I'm trading the NASDAQ. Again, I trade the indices on the 15-minute. So here's the NASDAQ 100 on the 15-minute bar, Onidia as the price provider. So these are buy signals, right? And technically, you can take every single one if you want. And I'm kind of zoomed out a bit, so you can't see whether they're green or red or yellow by much, but just trust that they are. Or you could zoom in on your screen if you like. And you have the buy signals that are triggered. And so what you want to do is only take this in order to follow rule 2, right? The buy signal should be higher than the previous buy signal. So every signal that's higher than the previous buy signal has a check mark next to it here. So the buy signal should check right below. So buy signal confirmed, that's the confirmed buy signal you buy there. That's the confirmed buy signal. The reason this is confirmed, it's higher than this. The reason this is confirmed, it's higher than this. The actual position within the chart, right? I'm going higher to see this. I'm going higher to see this, or just about. This one has an X in it because this one is lower than these ones. So you should avoid it. In this case, it turns out to be a profitable trade, but generally speaking, you'll get out of a bunch of choppy situations if you avoid it, like these ones. See, this one was lower than this, and you just chopped around for about close to a whole day, and you took a risk, but you just chopped around for most of the time. So this is why I advocate following rule 2 if you want to be more, if you want your efficiency and your profitability to go up, your winning percentage to go up, essentially. Same thing for the downside, right? So these are all downside signals, and every single one of these that I put a check mark next to except this one, I put that by mistake, so I have to own up to that, are lower than the previous ones. So this is lower than that, this is lower than that, this is lower than that, this is lower than that. This one is not, like I said, but this one is lower than that, and this one is lower than that. All of them are valid sell signals that lead to high profitable potential trades. So out of all of these that we have highlighted, 3 here, 3 here, and 3 here, six trades you would have ended up almost immediately into profit without hitting your stop loss level. And so that's what the filtering, that's what rule 2 does for you. It keeps you getting from stopping out of a lot of trades. You also notice that I have the buy signals completely turned off, and I'll show you how to do that as well. Because if we're consistently trending down, then I don't even want to look at the buy signals. You can have it on, but for illustration purposes, I thought it would just clutter the chart, and I wanted to make a point about following signals that are in the same direction as the previous. Okay, so these are just general trades, and I wanted to give, I know a lot of people are interested in trading options because of the leverage they offer, and I wanted to show how simple trading options could be if you use PTP Trend Trader and also include overnight price data for individual stocks. or indices as well. So here you have price of Apple stock. Each bar represents 4 hours again, and some of this represents overnight data. So, but in either case, it's still the same. You can place your trade once the market does open. So this is from the low in June up until the September. If I'm an options trader, I want to minimize the amount of delta. Minimize the amount of volatility that I'm taking on, and the amount of time that I'm purchasing, right? Because time is a big input into options contracts, and you just don't want to buy your options contract and sit around forever. And what PTP does for you is it gets you in right before the move starts in the direction that you expect it to go. So in this case, you have a couple of buy signals here, and almost immediately we start to move up. And you have a buy signal again, and you start to move up. So what that does is you can bring in your trade, your options contracts into a closer month, or I'm not going to go delve into too many options. You can do whatever option strategy you do, or you're selling puts or whatnot. But essentially, you only have these 5 signals since May that got you into Apple trades. So if you're an options trader, you would have been very efficient just taking these 5 signals and actually six signals and using PTP buy signals in Apple since May, and it would have made up probably all of your profits for the year, instead of having to play the guess game around earnings releases and news releases. So this is how an options trader can use PTP trend signal to trade options. Here's another example of Zoom buy signals. So we have 7 trades signaled, and 5 out of the 7 end up being winners. And the 2 losers highlighted here, this one and this one, you actually ended up going into a profit, but came back against you right away. Again, if you're using stop loss levels, you didn't lose much. But when you do make money, when you do make profits, you're making a whole lot, right? You're making 10, 15, or in this case, 20% moves very quickly. And the speed of a move determines how profitable you're going to be in an options trade. So that's something to keep in mind as you use PTP buy signals to do your options trades. Again, very efficient, right? Since April till now, 5 out of 7, I'll take that all day. And this is for more so for position traders, but you can use this for options as well. It works on any time frame because charts are kind of fractal in nature. What that means is no matter what time frame you look at to trade, the charts look the same. So you would not, if I didn't have this 8-hour label on the chart, you would not be able to tell this was an 8-hour chart. And same thing here. If this for Apple, you would not be able to tell this was a weekly Apple chart if I didn't have all these labels on it, and you weren't able to tell. So you can use this to do long-term trades as well. So this is you're only checking your chart once a week essentially, because the bar only closes once a week. This is from May of 2018, and so you can use this to manage 401k positions and retirement accounts actually, or IRA accounts, instead of just doing short-term active trading as well. Same thing here, another example of AMD on the monthly chart. Red, you have a sell signal, goes against you. If I owned AMD, I probably want to get out here and just wait for another buying opportunity. Nothing wrong with AMD. It's a good company with good prospects, but if people are selling it and my tool tells me prices are about to go down, why would I want to take it down from $30 down to $1.60, right? You just lost 90% of your money to break even, 15 years later, or however long that is, from 2007 to 2020. It took you 13 years to break even if you just held on. But if you use this tool, you got out of that for the whole time. You got in there, got out, got in, and you're taking profits along the way. Because when you see green, you're getting in. When you see red, you're taking your profits off the table, right? So it helps. It makes your positioning very efficient. This is Micron on the monthly again, 2012 to 2013. You almost have 10x moves in these charts that you can take advantage of and get out of these situations where you're giving back 80% of your profits. It works on anything. I said in the beginning, crypto, Forex, stocks, and futures. This is a futures contract for gold. Actually, this is a CFD, but you can use it for gold futures contracts. So we have a signal here telling us gold prices are going to go up. They end up going up for a few months. Prices are going to go down are signaled here, and they end up going down for 7 months or so. Up, down, same thing. And back to what I said about learning how to drive, or are you able to drive? If you just look at this chart without any signal, you should be able to tell what to do at any point in time. So if we're in November of 2019, your position should be, you should be either be betting against gold, or you should not own any gold at all, because we're expecting it to come down into going into 2020. And this goes a little bit more advanced, and we'll probably have to save this discussion for another day. But I wanted to limit this to about 30 minutes so we could open it up for Q&A. But this is also has to do with short-term trading, a multi-time frame confirmation. What that means is, instead of just looking at one chart to make your decision, right? You can look at two charts to make your decision. So let's say that your primary trend chart. Remember, rule 1 is to pick your primary chart time frame. This is a 15-minute for the S&P. And once you got a buy signal, let's say I didn't have a chance to get into this trade here, right? I don't have to force it and get in somewhere here and disobey my rules of going in only at the close of a bar when I have a buy signal, right? What you can do is you can drop down to a shorter time frame and take the buy signals that are in the same direction as indicated with your primary time frame. So in this case here, primary time frame between 6 and 9 o'clock has been indicated to be up, right? It's a PTP long signal here indicated. So what you want to do in this situation is take only long position. Let's say you missed this long position, this buy signal. You can come down, drop down to the 3-minute, and take every signal that you see in the direction of the higher time frame indicated, because again, charts are fractal, right? If the 15-minute is going to go up, the 13-minute is going to go up as well. It has to move up in the same direction. They can't move in two opposite directions. But sometimes it takes a break on the 3-minute, and it gives you an opportunity to buy in some more, opportunity to buy in again. So this is multi-time frame confirmation. We'll probably have a separate video on this, and doing placing stop loss levels and different complicated situations you might run into in trading, and how you can make your decisions in those situations. So we'll save that for a later time. But just to give you a clue, this is what that looks like. So again, how do you get started with PTP Trend Trader? This is a free membership for 30 days. Give us your name and email so we can give you updates, and you can have access to the tool on TradingView for 30 days. You can sign up for free TradingView account, or if you want to use a paid account, a pro account with real-time data and have multiple indicators and different additions, you can use this link to get $30 off. So essentially, you'll end up getting about 3 months free for the year if you use this link to sign up for TradingView. And TradingView will have a username for you. You give us your username, and we'll give you access to PTP Trend Indicator within 24 hours. So let me just walk you through real quickly what PTP Trend, what TradingView looks like. This is TradingView.com. You come here and you can start the free trial, or click anywhere here to start the free trial. Go through the process of signing up, or you can use our link, click and come directly to here and save the $30 to get 2 months off. So if you do want to get a paid one, we don't get any kickback or anything from TradingView for this. But if you do want one, I would suggest you use this one here, Pro. You don't need any of the above. But basic to start with, it's probably fine as well. So that's how you can get started. And they'll give you a username. Once you do have a username, your account will look like this, actually. So let me just go to my profile. I'll leave that. Your account will look like this. You can come here and say you want a chart. Yeah, you can come here and say you want a chart. This is once you've given us the once you've given us your username and password and all of that, right? So let me just change up a few things so it looks consistent to what I showed you in the previous examples. And TradingView has a very great user guide and like intro to TradingView. So we're not going to spend too much time on it. I'll just show you how to add our indicator on it. But this is basically what the chart looks like. You can change what you want on there in this box here. So I'm bringing you up a chart of Apple on the 4-hour. I don't know why it's taking so long, but let me just go back to what I was doing with it. So that's what the chart looks like. And so when you come to our website, by the way, let me just take you to our website real quick. We're redesigning it, but to get started, this link should be there no matter how the new redesign looks like. You can come click get started, give us your username, click here to get started for the free trial, and then it will trigger an email to you once you've given us your name to go ahead and give us your TradingView username, and you can do that as well. So, and also you can go to the how-to section, and it shows you how to sign up, how to add the alerts, how to use the indicator, and how to get started with the PTP altogether. There's also how-to videos and how-to guides up here as well. And we'll add more content to this as we go along. So that's what our site looks like, and that's where you will initiate the relationship with us to basically become a member. So once you do that and you do give us your username, you'll be able to come here to where indicators are, this FX signal here, and you'll come to invite only scripts. So once you've given us your username, we'll give you access, and it'll be a PTP Trend Traders only as an invite only script. So that's the only way you can get access to it. You come under this tab and you just double click there, and that's what the chart will look like once you add it on. Actually, you don't need to double click. And you'll notice that my screenshots from earlier look a little different, and we'll show it's easy to change if you want to change the colors of what the look and feel looks like. You can go to settings and change the style up if you like, to be any color you want. But that's what it normally looks like when it comes standard out of the box. For your chart as well, you can go settings of the chart and change that here. So you can change your borders to black. So this is pretty much how I have mine set up. Your wicks to black, and this to a more vivid green, and this to a more vivid red, and you have exactly what I had on my previous chart. Okay, so that's how you set it up.